Hey everyone, welcome back to Corporate Decoder, the place where we decode the tricky language of corporate filings. Today we are going to dive into a report from Bullfinch Fund Incorporated. It might sound a bit dry, but trust me, there is a story hidden in these numbers and we are going to find it. Stick around because we're going to break down their financial health and what it means for their investments. So we have here is the annual shareholder report for Bullfinch Fund Incorporated. This is like looking under the hood of the company to see how it has been doing financially. It covers their unrestricted series and their Greater Western New York series. Think of these as two different investment pockets within the main fund. The big takeaway from the management discussion is that both series of the fund have had a pretty good year. The unrestricted series returned 18.73%, which beat its benchmark, the value line geometric index, which only went up 2.31%. That is a pretty significant outperformance. The Greater Western New York series also did well, returning 15.49%, also beating that same index. The manager, Christopher Carosa, mentions he bought some new stocks and sold others to try and boost performance, especially looking at things like AI and value-based holdings. Let's look at the performance graphs and tables. For the 1 year ending the 31st of October 2025, the unrestricted series returned 18.73%, while the value line geometric index returned 2.31%. Over 5 years, the unrestricted series returned 12.40% annually compared to 6.22% for the index. And over 10 years, it is 8.76% versus 3.57%. This shows a consistent pattern of the fund outperforming its benchmark over the long haul. Now let's switch gears to the Greater Western New York series. The performance here is also strong, though slightly less than the unrestricted series. For the 1 year ending the 31st of October 2025, it returned 15.49%, again beating the value line geometric index. Over 5 years, it is 11.96% annually compared to the index's 6.22%. And over 10 years, it is 6.22% annually versus the index's 3.57%. The manager notes that this series benefited from a shift towards small cap value stocks and even a major buyout. Looking at the asset allocation for the unrestricted series, we see it is spread across a lot of different industries. Computers and software make up a big chunk at 8.52%, followed by medical products and supplies at 6.55%, and then computers hardware at 5.99%. They also have a significant allocation to money market funds at 11.39% and Schwab Bank at 6.32%, which suggests a pretty conservative approach mixed with growth potential. Let's dive into the specifics of what they own in the unrestricted series. For computer software, they hold a lot of Microsoft Corp, valued at $517,810, and Oracle Corp, valued at $341,393. For medical products and supplies, Johnson & Johnson is a big one at $348,087. They also have Western Digital Corp, in computers hardware valued at a hefty $600,840. It is good to see they are intangible businesses. Interestingly, for the Greater Western New York series, aerospace is a much larger allocation at 11.29%. They hold L3 Harris Technologies Inc., valued at $144,550, and Northrop Grumman Corp at $116,690. Banking and finance is also significant at 8.18%, with Citigroup Inc., valued at $161,968. They also have a considerable amount in money market funds at 13.91% and Schwab Bank at 1.44%. Now let's look at the statement of assets and liabilities for the unrestricted series. As of the 31st of October 2025, their total assets were over $14.4 million. Their investments in securities alone were valued at over $11.9 million. They have some liabilities too, mainly accrued expenses and amounts due to their investment advisor, totaling just under $47,000. This leaves them with net assets of about $14.4 million. For the Greater Western New York series, the numbers are smaller, as expected. Their total assets are around $3.47 million, with investments in securities valued at almost $2.94 million. Their liabilities are much smaller here, just under $9,000. This leaves them with net assets of about $3.46 million. The statement of operations for the unrestricted series shows that for the year ending the 31st of October 2025, they had investment income of over $272,000. Expenses were around $183,000, but the real story is the gain on investments. They had a net realized gain of about $1.49 million and a net change in unrealized appreciation of over $708,000, for a total net gain on investments of over $2.2 million. This resulted in a significant increase in net assets from operations of over $2.29 million. For the Greater Western New York series, the statement of operations shows investment income of about $64,000. Expenses were around $43,000. Their net gain on investments was about $445,000, made up of a realized gain of over $476,000 and a net change in unrealized depreciation of about $31,000. This led to an increase in net assets from operations of over $465,000. Looking at the financial highlights for the unrestricted series, the net asset value per S-Hair at the end of the year was $30.18. This is up from $25.66 the previous year, showing good growth. The total return for the year was 18.73%, which aligns with what we saw earlier. For the Greater Western New York series, the net asset value per S-Hair at the end of the year was $31.67, up from $27.58 the previous year. Their total return for the year was 15.49%. It is good to see both series growing and increasing their value per S-Hair. The notes to the financial statements provide some key details. It tells us how they value their investments using fair value measurements for common stocks. They use quoted prices in active markets. Cash and cash equivalents are also detailed, with money market funds and bank sweep accounts being part of that. They also mention that they are compliant with accounting principles generally accepted in the United States. In the notes for the Greater Western New York series, it highlights that their investment objective is capital appreciation by investing in companies with an important economic presence in the Greater Western New York region. This gives us a clue into their investment strategy beyond just general growth. This section is quite interesting. It details how the board of directors reviewed and approved the investment advisory contract with Carosa Stanton Asset Management LLC. They looked at the quality of services, investment performance, the cost of services, and economies of scale. They placed the greatest emphasis on long-term investment performance and were satisfied with the advisor's results, noting that as of the 31st of December 2024, the advisor had outperformed benchmarks in all periods. They also compared the fund's expense ratio to similar funds and concluded it was satisfactory. Finally, the report includes standard disclosures about the registrant's disclosure controls and procedures and internal control over financial reporting. Essentially, they are stating that their systems are in place and effective for reporting financial information accurately. So, what is the story here? Bullfinch Fund Incorporated, through both its unrestricted series and Greater Western New York series, has demonstrated strong performance, significantly outperforming its benchmark index over multiple time frames. The management strategy, focusing on value-based holdings and capitalizing on trends like AI, appears to be working the diversification across industries. While including conservative elements like money market funds suggests a balanced approach to growth, the consistent increase in net asset value per S-Hair and positive total returns are clear indicators of financial health for both series. The approval of the investment advisory contract by the board, based on strong long-term performance and reasonable cost, further solidifies confidence in the management. In conclusion, Bullfinch Fund Incorporated seems to be navigating the market capably, delivering solid returns for its shareholders. The slight difference in performance and sector focus between the two series offers investors options based on their specific investment goals. This is a fund that seems well managed and is achieving its stated objectives. Alright, that is our deep dive into the Bullfinch Fund Incorporated's annual report. What do you think of their performance and strategy? Let us know your thoughts in the comments below. If you found this breakdown helpful, make sure to hit that like button, subscribe for more corporate insights, and join our Discord community linked in the description for more discussions. Thanks for watching, and we'll see you in the next video.